Hello, this is the trade site U.S. stocks and futures market preview for the week beginning Monday, July 22nd, ending Friday the 26th, 2019. Hope you're having had a good trading week last week. It was a little light. It was the options expiration week in July. Never usually one of the more exciting weeks in the market. It actually was a move late Friday, which is kind of unusual. And volume, as you'll see, for the options expiration itself was just horrible. We'll talk about that in a moment. Meanwhile, here's the ES front month futures contract. This is the daily chart of the broad market and futures form. You'll notice that we had that 13 sell signal on the secret tool back about a week ago, and we have used that risk line and rolled over so far. So that is playing out. Remember, the target of that becomes that red line, that static trend line down there around the 27.45 area. So let's keep that in mind and see what that leads to. Let's go through the daily charts, then we'll talk about the intra-week action. Go from there. So in terms of crude oil, up 44 cents to 55.74, but it's been down for the week. Gold was down a buck 60 on Friday, but made new highs, swept new highs, and it was up for the week. The S&P Cash Index, which also has a 13 sell signal, as it should, down 18.50 for the day. Little tiny gap up to start the day, and then filled that kind of flat, and it took forever. And then in the afternoon, there was a little bit of a sell-off, as you'll see. NASDAQ 100 down 69.23. No actual signals here. The SOX down 3 points. This one got a 13 sell signal on Thursday. So keep that in mind. So the SOX and the broad market have sell signals now in place. Biotech's down 51.51. Russell 2000 down $7.72. The VIX gains 92 cents, moving back up off that risk line that's still active from the signal back in March. The trend closes at 1.20, so that keeps that 10-day moving average up there too. Now here's the thing, NASDAQ volume. Remember, options expiration, especially triple expirations, they have big volume spikes. Some of the big high dots there on that chart are those triple expirations in March and in June. But even the monthly ones, the non-triple ones, usually see an elevated amount of volume as the options expire and everybody has to roll to close out those positions. Instead, we got the exact opposite. This is why July is so usually uneventful for that. 1.8, almost 1.9 billion shares is all we got on the NASDAQ on Friday. So that was really disappointing volume, but it's summer. That's what summer's about. NASDAQ advanced decline ratio, negative 587. So more stocks were down than up. On the New York, negative 377. And then if we go through some of the majors, Google down 15.69, Apple down $3.07, Netflix down $10.11. Remember, it gapped down on Thursday after earnings and broke the last 6 months worth of trading. Amazon down 13.38, rolling off the highs, moving away from that $1 trillion valuation it was approaching. Tesla up 4.64, still recovering a bit. Facebook down $2.42. Goldman Sachs down a buck. TLT, the 20-year bond ETF, down 31 cents. The Dow was down 68, doesn't really matter, but the Dow also has a 13 sell signal on it. Really interesting. Okay, and that risk line was used. So the Dow, the S&P, and the SOX all have sell signals. In terms of the intra-week action, let's take a look at what we'll call 10-minute candles on the ES. So Monday, small spike up, but filled the gap immediately, and just a completely dead flat day. Volume was horrible. Tuesday, a flat opening, flat morning, but then finally dipped coming into lunch and kind of banged around after that. Wednesday, another flat opening. Not a lot of gaps this week. That was what was interesting. Wednesday, another flat opening, pushed lower in the first hour or so, and then that was it. Flattened out for the rest of the day until the very last candle, and that's when those Netflix numbers came out, by the way. Thursday, we got the gap down. We did fill it. Went lower, tested the lows. That was the low of the week, and then rallied back up and closed positive. And then Friday, we gapped up, filled the gap. We were hanging out dead even after lunch, and then there was a little sell-off in the afternoon. NASDAQ side looks similar, but notice Friday we got all the way back up into Monday's range before selling off to close at the lows of the week. So that's where we're at in the markets. These sell signals are very important to watch, obviously, and see what happens. In terms of economic data coming out this week, nothing on Monday. Tuesday, the housing price index at 9 a.m., existing home sales and Richmond manufacturing index at 10. Wednesday, we've got flash manufacturing and services PMI numbers at 9:45, new home sales at 10, crude oil inventories at 10:30. Thursday, core durable goods or durable goods orders, goods trade balance, preliminary wholesale inventories, the weekly initial and continuing jobless claims numbers all at 8:30, natty gas at 10:30, and then the big one, the first look at advanced GDP from the second quarter. So this is the first GDP number from the second quarter. Always a big one. Could cause a gap on Friday morning. It's expected at 1.8% for the quarter, annualized for the quarter. Charts as usual brought to you by eSignal. I will say also that we are next week. We have a 3-day Monday, Tuesday, Wednesday. That's the last day of July. Then we enter August, which is historically one of the most positive months of the year, before we enter September, which is historically one of the most negative. I think August should be a little bit better than what we're seeing in July. And then, of course, the markets get back to normal September through next April. Charts as usual brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading